Hello. Our webcam's not working. Twitter, we're going to get started in just a moment. Bear with me. One moment. Technical difficulties. Hello, Enrob. Enrob, can you hear me loud and clear? There we go. Special treat today. We got Gia on the live with us. All right, give me a sec. Hey, Enrob, can you hear me okay? Just want to make sure that we got the video going. All right, we got the mics on. All right, welcome everybody. Welcome Twitter Spaces. We're going to be talking about how will a recession impact real estate. Where are you guys located at? Are y'all here in Austin, Texas? Are you here in somewhere else in the world? Type it in the chat. I'm curious because recessions are going to hit different places in different ways. So knowing where you're at will help me kind of understand, the viewpoint that everybody's viewing this from. We got entrepreneur written behind us on the whiteboard. All right, so recession.
Seattle, Brentwood, New York, ATX, and Hill Country.
Seattle, New York, ATX. What are y'all seeing are y'all seeing any impacts of the recession that we're in? The news stations tell us that we're not in a recession just yet. Even though we've had 2 negative quarters of GDP growth, it does not mean that we're in a recession and that this is transitory. What is this phone number? 917-1460? Huh? Okay, well, can I remove it? Mm-hmm. Because, they say that we're not going to be in a recession until unemployment starts to rise. Unemployment is still pretty low. Who paid attention to the economic report that came out last week? There we go. Okay. All right. So how will a recession impact the real estate market? Well, in a few different ways. I guess first we need to agree if we're in a recession or if we're not in a recession. What do you think, Instagram? Enrob, Facebook, YouTube, what do you guys think? What do you think, Twitter? We've got Knowledge, Crypto God, NYC. You think we're in a recession or not in a recession? Hutto, Monarch, Georgetown, that's where Enrob is at, I guess. Well, over the last 6 months, we have seen some pretty drastic decreases in house prices. I was looking at the data from BRRRR this weekend, and at the end of December, the median sales price for every listing in BRRRR, not just Austin, but it was pretty accurate for Austin as well too if you secluded it. And Chris Sweeney actually showed me how to pull this data. But the median sales price had dropped all the way down from the height to March 2021. And it seems as if things have started to pick back up a little bit. But I'm not positive if this is a dead cat bounce and we're gonna come out of this thing, or if we're on the up and a dead cat bounce and prices are rising just a little bit because we're out of the slow season of real estate and we're starting to get into the start of the year, and prices start to increase a little bit, then we might be on the upward trajectory with home prices. But here's a few ways that a recession is going to impact the real estate market? I mean, first and foremost, as interest rates have risen pretty much all of 2022, debt got more expensive. So this always will affect real estate. So what happens when debt, the cost of debt starts to increase? What happens when the cost of debt starts to increase? Well, first thing that happens is you start losing the returns that you can get. You can't afford properties that you otherwise would have been able to. So as debt increases, then the returns start to decrease. If Chris Sweeney and us, I covered this in our last live last week, when we secured that seller finance deal, 3 duplexes in Round Rock, if we would have gotten those at an 8% interest rate, we wouldn't be getting that 18% cash on cash return that we're currently getting. Our return would have decreased substantially. Also, when debt increases, the cap rates start to increase a little bit as well. When debt interest rates start to decrease, then cap rates start to decrease. And the reason that it's doing this is because the cost of owning these properties and getting debt on these properties cost way more than it did when interest rates were lower. So you can afford less than you could when interest rates were 2%, now that they're at 7.5%. Buyers have a lot, even on the single family residential side, home buyers, they can afford a lot less than they could when interest rates were dirt cheap and money was basically free. What was the statistic that Jason showed us? He said that there was 50 million home buyers at the beginning of, I don't know, it was like at the end of 2021 or at the start of 2022, there was 50 million home buyers in the market that could afford a $400,000 home, something along those lines. And now there's only 20 million that can afford it. 30 million. So we've lost 20 million home buyers. Almost 50% of people cannot afford the house that they once could. Just because debt has increased and interest rates have increased, it doesn't necessarily mean that your payroll has increased along with interest rates. The other thing that's going to happen, and we've been seeing this a lot, and I watch out for this a lot, is there's been a lot of layoffs recently. Amazon, start naming some names. Amazon, Facebook, Tesla, Twitter. That might have had to do with just Elon cleaning up shop. But there's a tremendous amount of layoffs. Realtor.com. What are some other ones? I said Amazon. Anyways, companies are starting to contract a little bit. They're starting to clean up their workforce. They know that we're going into a recession. They know that they need to be prepared as we go into a recession. And so they're starting to lay off some of their workforce. So when people can afford less, when they're losing their job, they're going out into the economy and spending less. It's a trickle-down effect throughout the entire economy, and it doesn't just affect real estate, obviously. And then at the same time, when inflation is still high and prices are going up for items that the consumer is trying to buy, then it just all around creates an environment that is not healthy for any business to thrive necessarily, unless you know what you're looking for and know how to get in there and take advantage of the opportunities that are presenting themselves. So how will a recession impact real estate? I mean, it's going to impact it in so many different ways. The debt, again, is more expensive. Home prices have already decreased. We're back to March 2021 levels for prices here in the Austin, Texas MSA. The returns that real estate investors are going to get on their properties are going to go down if they're buying new ones with a higher debt. Cap rates on commercial properties are starting to increase with the debt increases. And it's probably going to create a big renters market, especially in hot markets such as Austin. I mean, there's already a shortage of homes here to buy, and inventory levels have been they were extremely low. When we were at the peak of all this, then they started to rise as debt started to rise. But they've started to come down again slightly. The available inventory that someone could buy to live here in Austin, Texas. But so there's not that much inventory anyways. But now, since debt, if you can't afford a $400,000 house and pay that mortgage, then what choice do you have left to do if you have to live here than to rent? So, I mean, that puts landlords in a good position potentially. If there's a hot renters market, if there's an extreme amount of demand to live here and people can't afford to buy houses here and they're forced to rent, then that's another way that it's going to affect the real estate market. So what should you do? Are you who here has never invested in real estate and they've been waiting for this? I mean, prior to when I made my first investment in anything legal, I was watching the first I started out by trying to invest in stocks. So didn't jump into real estate immediately. I had some money saved up. I had about $40,000, give or take, that I had saved up, and I was just sitting on it cash. This was 2016, 2017, and I was just waiting to pull the trigger on some investment opportunity. So I was watching the stock market, and back in those, 2016, that's when Trump got elected. The stock market just boomed. Dow Jones, every index started just drastically increasing when Trump got elected and started to enact, all the policies that he did. So I'm sitting here with, 40 grand in my pocket, and I'm just waiting to invest. And the way that I envisioned it in my head before I actually pulled the trigger on something is I said, well, I'm going to wait for the crash. I'm going to wait for the crash to come. A crash always comes. The economy moves in cycles, business moves in cycles, real estate moves in cycles. Stocks, they have bear markets. They're not bull markets for forever. So I'm going to wait for the stock market to crash, and then I'm going to buy. I'm going to go in heavy. I'm going to buy dirt cheap, and I'm going to ride it out as we, ride up the upswing after the bear market. And if there were some opportunities to do that from that time till now, but not like recently. I mean, most values for stocks of major companies, Facebook, Amazon, Tesla, they're all down 50, Apple, 50+%. And a lot of these are tech companies, but these were the companies that were providing a lot of growth during the last bull market. And so I was waiting for these opportunities, and had I waited from then till now to buy, I would have missed out on so much money and so many great investment opportunities that I did take advantage of because I wasn't just waiting until the crash came to finally start investing. But there were opportunities like in 2018. I remember there was a big dip in the stock market, and I was freaking out. I had invested a little bit prior to that dip in 2018. And I invested that entire 40 grand into pretty volatile cannabis stocks with my partner, Matt. And when that crash came in, or that little dip came in 2018, I was getting nervous about losing all my money. All the fear had set in. But the reason I'm saying all that is if you've been waiting this entire time to invest in a crash when real estate prices have decreased so much, well, hey, now's your time. So what are you going to do? Have you invested in anything yet? What are the opportunities now? If you waited this entire time, you're no longer going to go out and go to a mortgage broker or a bank and get a 2.5% interest rate. Your debt's going to cost a lot. We were getting hard money loans, interest only, 12 to 24 month term, hard money loans to invest in properties with, to just secure them, and then we'd refi out later. Well, we secured these hard money loans a year ago at 7.99% interest, and now we're going to refi, and our mortgage is more than the hard money loan costs us. So if you're waiting until now to invest, it's a different opportunity. It's not the opportunity you've been watching pass by you over the last 5+ years. It's a new opportunity. It's a new strategy. You have to approach it from a different viewpoint. It's a different game. And so you need to be prepared. You need to have the knowledge of what to do, how to identify these opportunities, and how to take advantage of these opportunities. But right now is a great time to buy. And this is how you should take advantage of the recession. There's a saying out there. I think it was by one of the Rothschilds, Nathan Rothschilds, potentially. And I'm sure everybody here has heard the saying. And this part of the saying, and this is what gets repeated most often, is that you should buy when there's blood in the streets. But that's just part of the saying. The rest of the saying is you should buy when there's blood in the streets, even if it's your own. So even if it's your own blood in the streets right now, well, hey, we've got some investments that aren't doing that great due to, we bought some properties that we were going to flip. We closed on them May, June. And now the price that we can sell them at, we're still above water and we're going to make a profit on them. But the price that we can sell them at is like $100K, $120K below what we thought we were going to sell it for when we bought it. So market values have decreased. And if you're owning any investment at this time, hopefully you've got some cash flow coming in. Hopefully it's sustainable. Hopefully you're not going to be forced to sell because the only reason someone in this market is going to sell is because they have to. Nobody wants to sell in this market. You're going to sell your property for way less than you could have 8 months ago. But the only reason that somebody is going to sell right now is because they absolutely have to. Maybe their debt's coming due. Maybe they had an adjustable rate and now their mortgage payment is substantially higher than it was when they acquired it. There's a lot of different, maybe they need the money to save their ass from something else. There's a lot of reasons why somebody may want to sell right now, but the only reason they want to is because they don't want to. They have to. They have to sell. So if that's you, I want to sell those two properties. They're not great rentals. We didn't buy them as rentals. We bought them to flip them. So I'm ready to offload them, get our cash back out of them, and go take advantage of some of these new opportunities that are here. But buy when there's blood in the streets, even if it's your own. And right now there are some new opportunities. So what are those opportunities? Chris Sweeney says, when everyone is cautious, be greedy, and when everyone is greedy, be cautious, by Warren Buffett. Very true. Who's being cautious right now? I can tell you that most investors in the Austin, Texas area have ceased. Most have either A, gotten out of the game, B, they've ceased buying, or C, they're being extremely cautious on what they buy. It's a brand new game. You're no longer going out buying a property, at least right now. You're no longer going out buying a property and then you sell it 2 months later for $100,000 profit. It's a completely different market. And right now you should be looking for cash flow. You should be looking for opportunities that can sustain themselves. You should be looking for opportunities that will service the debt that you're going to be forced to get at these higher rates. You're going to be forced to identify properties that will give you a better return. If this was a year or so ago, I'd say, hey, let's hold on to those two flips. Let's just rent them out. We'll make way more in appreciation than we'll lose in the monthly cash flow. We can go ahead and refi these at a 4.25% interest rate. Our debt's not going to be that much, but it's a different game now. So you have to analyze these properties and these investments with a different way. But there is a ton of opportunity out there. So what are you doing to seize it? And this is what you should be doing in this recession is you should be stacking up your cash. You should be cutting out things that you don't need. You should be looking for opportunities and you should be growing and expanding, looking for ways to increase your income. Don't contract with the rest of the world. Double down. Be greedy when everyone's being cautious. Buy when there's blood in the streets, even if it's your own. And get out out there and go take advantage of some opportunities. Now, some of those opportunities is, like I just mentioned, sellers who are forced to sell. There's a lot more motivation in the market, and nobody is selling right now because they want to sell. They're selling right now because they have to sell. So you can come in and you can provide great opportunities or great solutions to one of these sellers who has to sell their property right now. I think in the last, excuse me, we pretty much made an offer on every single property in Austin, Georgetown, Round Rock, Hutto, Taylor, Cedar Park, Leander, Kyle, Buda, San Marcos, New Braunfels, any other, Manor, Bastrop, Elgin. We made an offer on every single property that was listed below 400 grand, single family home. And we made an offer on every single duplex at the time that was listed below 500 grand. And we made an offer, I think, no, maybe it was below 750 grand. And then we made an offer on every single fourplex that was listed slash triplex that was listed below $1 million, or maybe it was 750. I don't remember. On the MLS here in the Austin MSA. So, I mean, we've offered on everything. And we've identified some good opportunities, and there have been some sellers out there who are willing to sell at a low enough price that made sense. We also were able to identify some seller finance opportunities. We got a sweet deal done with Chris Sweeney. Chris Sweeney found one of these properties listed on the market, got under contract, negotiated a mortgage wrap, assuming the seller's existing loan. Made it to where we didn't have to come to closing with anything. Even negotiated the seller paying part of the mortgage payment, I think, for the next 5 to 7 years. The seller had to come to closing with cash, and over the next 5 to 7 years, he's going to pay the new owner of this property. He's going to pay part of their mortgage. He really wanted out of this property because he wanted to. He's selling it because he has to, or there's some other situation going on. So we're able to come in and provide a solution for that. Chris Sweeney got it done, got it sold, and that was an amazing deal. So there's things like that you would have never seen a year ago. And all these opportunities are happening right now, and they're not going to be here for forever. So when all this started to take place, and properties are sitting on the market for 60, 90, 100 plus days, especially if they're bad properties in bad locations. They're not priced right. The listing agent's not doing what they need to be doing to market the property and get it sold. People started to get nervous. I mean, panic starts to set in. If you had to sell this property at this certain price and it ain't selling and you ain't getting no offers and no one's going to check out the property, sellers started to get really nervous and really anxious. So that was that initial part of this, and that initial shock to what's happening, and that panic that they were initially feeling and experiencing is not going to be here for forever. I mean, that panic will subside. The longer they sit in that, I don't know about you guys, but anytime something hits me like that, initially, the emotional side of it will kick in, and I'll be more willing to make rash decisions and unlogical decisions in that moment. But the longer that I sit in it, the more I'm able to logically think it through and come up with a plan and come up with a solution to the problem. So they're going to do that too. I mean, these sellers are not going to stay in panic mode for forever, and they're going to come up with solutions for the problem that they are experiencing. But you can be one of those solutions to the problem that they have. So here's what you should do. Number one, decrease expenses. What do you not need? I've been preparing for this shit my whole life. I don't spend, the one thing that I spend money on that maybe I shouldn't is, but I can cut that out pretty quick, and I don't mind eating beans and rice and tortillas and things like that. But I don't have a Corvette that I'm driving. I don't have this $3,000 apartment that I'm renting downtown Austin. I don't have a bunch of expensive stuff that I'm throwing my money away on. I've been spending every single penny on our businesses and investing in real estate for years. And my monthly expenses just to live are pretty dirt cheap. I could live easily off $1,700 a month, and that includes rent and everything. I drive a Prius. I spend maybe like $20 every 2.5 weeks on gas. So I've been working on decreasing these expenses my entire life and taking all this extra capital and buying real estate with it, spending more money in our businesses, taking more risks in our businesses. But if you've got some of these things, I wouldn't suggest that you hold on to them during the recession. Get rid of them. If you've got, some fancy car that you don't need and it's, not that important, get rid of it. I don't know, go sell it. Take it back into the dealership. Go get you a Honda Accord, Toyota Corolla, whatever. Yeah, I mean, you don't need all this expensive stuff right now, especially as we go into a recession where you're going to need some of this cash flow to sustain you, especially if you want to start taking some risk. So number one, decrease your expenses. You don't need any of that expensive stuff. I live very, very cheaply and very happily and have everything that I need. And it allows me to take more risk because I don't have all this stuff built up, weighing over my head. I'm able to take every penny, pour it into real estate, pour it into our businesses, take more risks because I don't have all this stuff. So figure out what you don't need and get rid of it. Figure out what you can live without and get rid of it and start saving this capital to go invest. Number two is if you don't have it, you need the knowledge. You need the knowledge to identify opportunities. If there's a great deal right now and it sat right in front of you, would you know it's a good deal or not? If the answer is no, then you need to figure out how to acquire this knowledge to identify good deals and how to take advantage of these good deals. You don't need a tremendous amount of money to invest in real estate. You don't need an 800 credit score to invest in real estate. All you need is knowledge. You need the knowledge to identify an opportunity, and you need the knowledge to figure out how to take this opportunity, put it together in this deal, and see it all the way across the finish line. So you need knowledge. And then three, what I'll say is be aggressive. I can't spell, but you need to be aggressive. So when you see an opportunity, you've been waiting for the last 5-6 years. You've been waiting for the crash. You've been waiting for the recession. You've been waiting for all these things to finally be here. Don't wait anymore. When you see an opportunity, go tie it up, go lock it up, and go figure out a way to, beans and rice. All right. Go figure out a way to get this opportunity across the finish line. Say you found a deal right now. You say you decrease your expenses, you're living frugally, you're just hungry. And you should stay in a state of being hungry. Not just physically, but being hungry for your goals, for your business, for your dreams. I mean, Matt and I live in a state where we're constantly hungry. We're never satisfied with what we've accomplished. I feel like we haven't accomplished anything at all. And I'll probably feel like that for the rest of my life. And it's not in a bad way. It's what motivates me. It's what allows me to be aggressive. It's what allows me to not buy dumb stuff. It's what allows me to, have a constant need to acquire more knowledge of how to get more stuff done, how to get more experiences. So you need to be aggressive. If you found an opportunity right now, it came across your desk, go lock it up. If you think it's a good deal, you have the knowledge, you've identified the opportunity. You don't need to know the 10 to 12 steps of what you're going to do next to take it across the finish line. The only thing you need to know is that, hey, here's a deal. Here's an opportunity. I'm going to lock it up and I'm going to go figure out a way to get this deal done. So be aggressive, take action, don't wait. You've been waiting this entire time, and now is not the time to wait. This period of time where sellers have to sell, where home prices are decreasing, where sellers are extremely motivated and they've got a lot of stuff going on, is not going to be here for forever. Like I mentioned, initially they're experiencing that panic and they're experiencing, what do I do? My house has been sitting on the market for 60, 90 days. I can't sell it. I need this money. I have to do X, Y, Z. They're panicking. And that is the time to come in and provide a solution and help them out of that scenario. But they're not going to be panicking for years. They're going to figure out a solution. Maybe they, who knows? They're going to figure out a way to get out of the situation that they're in. And they're no longer going to be panicking. So you need to take advantage of these opportunities now. And if you don't know how to identify those opportunities or how to gain the knowledge, then look at this little banner if you're watching on Facebook and YouTube. For those on Instagram, come join our webinar. We're going to teach you how to invest in real estate with $0. We're going to do this January 28th at 11 a.m. Central Standard Time. You got to sign up for it. The link's in the bio. You got to register. We'll send you an invite, but we're going to cover this. And so you need to go to more things like this. This is free. This is for everybody here who has a 9-to-5 job and they can't join or they can't go out and acquire the knowledge during the day. Come join on Saturday. Go join another webinar that people are putting on. Go to YouTube at night and study. Go make some offers. Go do something to acquire this knowledge and to start to become more proficient in being able to identify opportunities and deals. Decrease your expenses. You need the knowledge. Be aggressive and take advantage of all these opportunities. You also need to build some relationships with people. Like I mentioned, with all the real estate investors in Austin, on the majority on the residential side, most of them aren't in the game anymore. I was having our team call our buyers list the other day, and I mean, a lot of people signed up for this buyer list 2 years ago, and so we're running through the buyers list. We're calling all the buyers. We're saying, "Hey, Kat, this is Alex with TRE. Checking in. Here I show that you're interested in buying duplexes and quadplexes in Austin. Is that still the case? Are you still investing? What are you looking for right now? What type of opportunities you want?" Majority of people are saying that they're not buying real estate anymore. I don't know if they had a bad experience. Maybe they weren't really an investor in it for the long run. Maybe they got burned by New Western or something on a bad deal. But they're no longer buying real estate anymore. And so a lot of people are exiting the market. So you need to be connected with those who are active in the market. You need to be connected with players who are finding the opportunities in the market. You don't want to go reach out to someone on some Facebook group who's never bought a deal in their life and there's window shopping. Go be with people who are getting deals done. Go be around people who are taking full advantage of this opportunity. See how you can provide value for them and help them out. That's one way, which we'll cover in the webinar, that's one way to invest in real estate with no money, no credit. All you need is the knowledge. All you need is the know-how to identify an opportunity, the know-how to get it from point A to point Z, which, by the way, there's not an exact process for every single deal. Every single deal is different. No single deal is going to be exactly the same. There's going to be a bunch of different variables that are different in this deal versus this deal. So you're going to have to be able to learn how to solve problems, identify opportunities, and see things all the way through. But the recession is here, no matter what the news tells you. I'm willing to bet that someone who's been laid off. I'm willing to bet that you've heard of these big companies laying people off. I'm willing to bet that that home prices are decreasing. I'm willing to bet that you've heard somewhere that, blah, 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 housing crisis. And yeah, all these things are happening. But this is the opportunity that you've been waiting on. If you're operating from that same mindset that I was 6 years ago, or however long it's been, 6-7 years ago, where I was holding on to 40 grand and I was just waiting for the crash to happen so that I could start investing and take advantage of all these sweet deals. Well, that would mean that you're waiting until now. So I would advise you no longer wait. Go out there, take advantage of these opportunities. And it's also a different game when you were watching people invest in real estate over the last 7 years when interest rates were 2.5%, 3.25%, 3.75%. And someone was buying a house to flip. They bought it one day, they threw some paint on it, they power washed it, and then the next month it's worth $100,000 more. Those days are long gone. The debt costs more. There's no buyers who are going to buy that property from you at that price. The holding costs are way more. Also, over the last 2 years, property taxes in Austin have increased substantially, doubled, tripled in some cases. So it's a different game. What you've been watching people do and be successful do over the last few years is no longer the winning game plan right now. There's different factors in the equation. There's different factors in the game right now. So I suggest you go out, you get the knowledge, and you start taking advantage of these opportunities. Again, if you want to join the webinar, we're going to teach you how to invest in real estate with $0. You don't need money. You don't need credit. All you need is hustle and how to know how to get an opportunity and see that opportunity all the way through. And you got to be a problem solver. Real estate investing in general, business in general, is just solving problems. So being able to take this problem, solve an answer for it, see that answer all the way through, and reap the rewards of solving that problem and providing that answer. So we're going to teach you how to do this. We're going to teach you a few different ways of how to start investing today with no money, no credit. We're going to give you all the knowledge you need. You have to sign up. If you don't sign up, you're not going to get the link and you're not going to be able to join. That's it. Go take advantage of this recession. Reach out to us. Let us know how we can help. We'll see you next time.